Hi guys, and welcome to my property news update. I'm Alegre-Wood, and this is the 15th of December 2008. Okay, so this week what we're going to cover is firstly UK news, unemployment rising, and will it continue to? Okay, price drops, who do you believe? Recovery, the economic recovery out of the recession, who do you believe? The next property crash already, okay? People are already predicting the next crash, which is quite interesting. And buyers jumping back into the market, just the experience that we've had, and also a lot of people in the market now are having. In other world news, I thought I'd introduce South Africa and the potential dulling of the market out there for the reasons we'll talk about. And a lot of my friends, being South African, and my solicitor and my accountant, are shedding the same sort of light on the story out there. And then finally, my view on the market, the fact that lenders are waiting, the news is going to continue worsening, cash flows are going to get better, and that you need to keep your emotions under control. And lastly, but definitely not least, is that enjoy Christmas. Alright, so let's get started. Alright, so first of all, about property.co.uk, UK construction hits record low. Now, unemployment is here, it's going to stay and it'll be with us for a while. And it's going to continue, lots more figures are going to come out. But in particular, I mentioned the construction industry, because what this means, with lots of construction workers going out or becoming unemployed, it means there's no one to build the property, which is effectively meaning that whilst demand is low, supply of property is low. And whilst that happens, that will keep a lid on it. But as soon as demand comes back, well, then there's a massive lag, and we spoke about lag last week, on the building, because it's going to take about 2 years for building. So be prepared for that, because that's a massive opportunity that you can take advantage of, and that's one of the reasons why I'm starting to talk about off-plan and educate our investors about off-plan. Okay, again, just another thing about, this is the BBC, how bad will unemployment get? Well, it goes through and it talks about some other things, but this is a really important bit, I think. If you look at France and Germany, 7.3%. So actually, at 5.7%, we look pretty healthy. Okay, and the reason we've held such a small unemployment rate is because we're quite flexible. Our workforce is quite flexible. The other thing that I was going to mention here, unemployment will peak well below the level seen in the last recession of the early 90s. All right, so that's quite interesting, and that's why I believe that we're going to have quite a quick bounce back from this one. Whole heap of reasons, but in one particular thing is because of the unemployment figures. Okay, so really, the other point that I was going to make there was the previous downturn had rampant inflation. We haven't got rampant inflation. Okay, inflation figures are actually coming down. Okay, so looking at house prices. Okay. House prices will drop 25%, okay? So what a lot of people are coming out saying is, 25 to 30% drops, okay? Back to sort of levels of 2004. What they're saying is 25%, there's 15 million already, so another 10 next year in 2009. And I think most of that will be in the first half of the year, okay? I'm not a big believer that that's actually dropped that much. I think, as I said, desperate people and developers are the people that are selling now. So they're an indication of the people that are actually selling for 15% less or up to 25% less. Okay, and this is just another one. The head of Barclays Bank has come out and said fall by 30%. Okay, so, and he makes it very clear, another 15%. Okay, so 15% so far and another 15%. So, they're pretty dramatic falls. And, if you're not sure, but again, these are indices. So what you need to look at is get specific, have a look at your property. That's really important, okay, in your area. Okay, so Financial Times. Asking prices will bottom out by the end of 2009, Rightmove. So Rightmove are coming out saying they think the bottom of the market will be 2009, which I think it'll be a little bit earlier than that. I think the middle of the year, okay? I mentioned that actually things are, we're at the bottom now. I actually think we're at the bottom in terms of the risks so much. I think prices will still go down. So I'm not saying we're at the bottom in terms of prices. But Rightmove are coming out and saying, this coming year prices will drop, but then we'll be coming out of it. So that's, good news. You've got to hold out for another year. The good thing is that interest rates are down, so your cash flows are easing, and that's very important. Okay. All right. So preventing the property crash of 2028. All right. So quite interesting. Already, we're only just heading in or halfway through this recessionary period or whatever, and already they're saying the crash of 2012 and 2028. Now the interesting thing here is they're saying that we're laying the seeds now for the future. Okay, so all the bargain hunters could lead to the 2020s overheating, she claimed. explaining property cycles are almost inevitable, arriving every 20 years or so. And it's interesting because there's there's a lot of evidence about an 18-year property cycle. And in that period, there's 2 downturns. Okay, so we generally say the biggest assumption you make is property will double every 7 to 10 years. And that pretty much fits with the economic model that they're talking about. Okay, and then another one, watch out for the next UK property slump. All right, again, property prices reach rock bottom as they expect to do in 2009. Bargain hunters will be ready to buy, and we could start to see the cycle that leads to another slump in 15 to 20 years' time. Look, it's a cycle. Everything about life happens in cycles, and property is no different. So, of course, there is going to be one. Okay, so you've got to be prepared for that. But mind you, by that time, we will have made a lot of money in property by then, so it's not going to be that much of a drama. Okay, so next one, buyers tempted back into the market. This is the Independent. And we're seeing this. The other day we got effectively gazumped by a cash buyer that come in and bought 25 properties, cash purchase, at a lesser discount than we were offering, which, disappointing for us because we lost that stock, but it's amazing to think that people are now jumping in. I know just in my portfolio, my personal portfolio, I've told James, who sources our property for us, that I want to expand my portfolio. So I'm actually rigorously buying property at the moment because I actually think we're pretty much at the bottom. And, I'm putting my portfolio on it. Okay, so finally South Africa. South African sun loses its shine. Okay, more and more British expats are returning home as political and economic fears start to become reality. Okay, now, there's a whole range of things happening over there, and it's quite unfortunate. We do a lot of business with South Africans here. A lot of people trying to get their money out, and it's really unfortunate. South Africa is a very similar economy and similar lifestyle, if you like, to Australia. So a lot of that's happening, and then certainly expats living over there, are looking at bringing their money back. There's a whole heap of stories about that, but it's something to be wary of. Over here we've actually got really good security, we've got good government, we've actually got quite a stable government and quite a stable lifestyle, albeit in the cold. But at the end of the day, this is something that, you've got to look outside and look at other economies. South Africa is a westernised democratic economy that speaks English, very similar to us. They run in cycles, okay? So just a general interest one. Okay, so coming back to my thoughts. So my view, I really think for now, if whatever you're thinking, you just need to hold tight. There's nothing you can do before Christmas. So sit down, enjoy Christmas, not too much obviously, but really don't worry about your portfolio. The cash flows are easing, rates are coming down, and I think we'll see a whole lot of lenders, that have been waiting now. They'll be coming back to the market. They'll be coming back with quite good products. Okay. Now, the news is going to get worse. They're going to have more sackings, more redundancies, more unemployment. All that stuff is going to happen. That's part of what news is. Okay. Your cash flow is going to get better. Look, the rates are at the lowest they've been for a long time. Okay. If they go down another %, that's the lowest they've ever been. So take advantage of that cash flow and enjoy it. Okay. Now, I don't mean going out and spending it on the high street, and I don't mean wasting it frivolously on buying lots of property and not considering cash flow. You still have to weigh the capital investment and the cash flow, outcome. So you need to keep that in mind. But also, most importantly, keep your emotions under control. Okay. Enjoy Christmas. Don't let it get to you. The team are always here, although we're on holidays for 2 weeks. But importantly, keep your emotions under control. And if you find you're having those sleepless nights, give us a call, get the questions answered. But most importantly, besides everything, is have a great Christmas. I'm off to Spain now for 3 weeks, so hopefully I'll be continuing to do the week by week things. But I won't guarantee it for the next 3 weeks because I'm going to be enjoying the Spanish sunshine. And I believe it's 16 degrees out there, which is a little bit better than here. But so we'll see you guys in 3 weeks' time. Fantastic.